What's up everybody, it's Jay Coyne, your Bay Area Realtor, and I just want to make this quick video sharing with you how to write a home offer non-contingent on the appraisal. Okay, writing an offer without an appraisal contingency. So we're here in the Bay Area and one of the hottest markets in the nation. Probably the hottest market in the nation. And in order to get offers accepted and to be competitive, you have to go in with less terms, okay, less contingencies, less conditions, in order for buyers to show that commitment, capability, and willingness to close the deal. That's what lenders want to see. So most offers that get accepted do not have contingencies in place, okay? And right now, behind me is a home that we are currently in contract for with my client who's purchasing the home, and we don't have an appraisal contingency. And so I just want to share with you the best ways to make sure that your risk is limited. What does it mean when you do not have an appraisal contingency? That means if you're getting a loan, the lender is only going to lend you, let's say, 80% of the appraisal value, not the sales price value. So what you want to do if you're writing a high sales price is to make sure the appraisal value matches the sales price, so that there's no discrepancy there between appraisal value and sales price value, okay? Because you're gonna have to make up that difference in cash. So because the market is super hot right now, and given COVID, the prices today are not indicative of past sales prices. Okay, everything's a lot higher, everything's a lot more, inflation, low interest rates, etc. People with lots of money, San Francisco, techers, whatever. So it's very, very hard to justify sales prices, especially for appraisers, because every sales comparable, is not matching up to today's prices, and that's the difficulty that we're in this market right now. It's very hard for appraisers, and it's very hard to write offers non-contingent because you're gonna need a lot more cash. But once a lot of these deals close within the next month or so, that's gonna bring a new level to the sales comparable values, so that homes in the future will then be able to be appraised based on, let's say, the sales price of this in the next coming month. So how do you protect against the sales shortfall or the appraisal shortfall? What can you do to stop it, to make sure that you're writing an offer and that the risk is limited? So what can you do to be confident writing that non-contingent offer? Well, the first thing, you definitely have to meet the appraiser at the home. You have to interrogate them a little bit. Don't come off as passive aggressive or hound them, but ask them questions like, where are you from? Do you know this market? Give them tidbits about the market from your own knowledge. Tell them how many offers that this got. Show them the competitiveness. How many offers did your client write before getting their offer accepted? Because sometimes in this market it could be 5, it could be 10 offers before finally getting a home offer accepted. Okay, so share with them how crazy it is and give them insights into the market that they can then use to ideally justify why you may be paying a little bit more than what other sales comparables are showing. Okay, using a local lender. Now, local lenders have local appraisers. You don't want someone coming from far out of town who doesn't know the market at all. You want someone who closes deals right in the neighborhood and is going to provide you an appraiser that has seen it all, has seen 5 other homes, done 5 other appraisals that day that have all appraised or are all purchased higher than what some of the appraisal values are, so that they know the market themselves. Okay. Also, local lenders are going to provide better time frames, more competitive time frames, and just do things a lot faster for you. Secondly is, once you meet the appraiser here, you gotta give them your own comparables. Do the homework for them, the homework that you did, in order to tell your client, yes, you can write non-contingent, or you should write non-contingent here. okay? Now, I know it's hard. It's hard to find something. In this instance, there was nothing in this neighborhood that had sold for this price. Okay, absolutely nothing. So what you have to do is give them something. You have to go out a little bit further into maybe the next town over, if you need to, or the next neighborhood over, ideally. Something, anything that you can show that's a similar size, a similar bedroom count, similar style property. It doesn't have to be exact. You know, you just gotta show them something that has sold recently that can potentially justify higher sales prices. Okay? Now, obviously, appraisers are gonna be strict a little bit, but you know, you gotta do the homework for them. Give them something so that they're just not pulling comparables out of the blue that is not gonna help you or your client at all. Okay? So making sure that you bring a packet of this comparable sales when you meet the appraiser and give that to them. Now, if there's really nothing that's justifying this sales price, well, you have to get as close as possible. That's the key. Okay? Making sure you can find some comparables that we're in contract 1.4 here. If you can find something that's 1.350, that'll justify 1,380,000, just to get the pricing as close as possible. That's what you have to do. And you know, of course, if there really is nothing, then it may not have been in your best interest to, or your client's best interest, to write that non-contingent offer. But you know, that's just the reality here sometimes. So as long as you made sure that your client knows the reality, knows what they're getting into, and having them make the decision, because ultimately it is their decision if they want to take on that risk or not. Okay, so as long as you can get as close as possible, and then they can make up that difference in cash. So that brings me to that next point, is that sellers are going to accept offers that have a higher down payment because of the risk, and because of, if the home doesn't appraise, they have the capability to make up that difference in cash themselves, just take it out of their down payment. Okay, so that's another way to protect yourself. If your client has 40-50% down, you know, anything above 20% maybe, then they have a little bit of room in order to make up for any appraisal shortfalls, and that's going to protect them. All right, everyone, that is the best way, and really the only way of how to write a non-contingent offer to limit your risk as much as possible, and making sure your client goes in there knowing of the potential outcomes, and really protecting them as much as possible, making sure that they're not going to have to make maybe over 100K in appraisal value difference, because that would be a fucking bummer. Now, there are ways to make up for an appraisal shortfall, and I'll talk about that in another video of how you can protect yourself and how you can maybe rebut or rebuttal appraisal shortfalls and make up for it. So, you know, I had another property that I was in contract for, and we had an appraiser from Merced. We're here in the Bay Area. We had one from Merced, didn't know the market at all, and gave us just an outrageous, undervalued appraisal, and it really fucked us. But that was what we had to live with, and that's what we had to do to move forward. That was the appraisal that we got. But we used some of these other tactics in order to fight that off and, you know, make the deal work out for our clients without much heartache or much stress. And I'm going to share with you that in another video, so stay tuned. Thanks for watching, everybody. See you in the next one.